Welcome to Uncovering Trust, a podcast by the Edison Group, a content-led IR business integrating analyst content, digital targeting, and investor engagement. Each episode, we're going to uncover the distinct features and latest developments of a selected listed investment company. Tune in to find interesting investment ideas and stay on top of what's happening in the investment company sector. I'm your host, Neil Shah, and today I am joined by Milosz Papst, Director of Investment Trust Content at the Edison Group, who will talk about the Aberdeen Asian Income Fund, ticker AAIF. Milosz, thank you for joining us today.
Thanks for having me.
So for listeners less familiar with this investment company, perhaps you could start with just providing a high-level introduction to Aberdeen Asian Income Fund.
Sure. The fund launched in December 2005 and is managed by Aberdeen's Asian equity team based in Singapore, which aims to generate an attractive total return from a diversified portfolio of Asia-Pacific equities, including those with above-average dividend yields. Investments are made across the market cap spectrum, and the managers are unconstrained in terms of geographic and sector exposures. The locally based investment team of 40 analysts and fund managers, including 3 dedicated ESG analysts, has built up a strong knowledge franchise over the last 20 years.
Okay, so how do the managers actually aim to achieve the fund's objectives?
Yeah, so Aberdeen's Asian equity team selects stocks on a bottom-up basis, essentially seeking quality businesses that are easy to understand and have strong balance sheets, that are operating in structural growth areas, and which are generating reliable dividends, earnings, and cash flow. The fund's performance is measured against the MSCI AC Asia Pacific ex-Japan Index, which is known as the reference index. ESG is an integral part of the investment process, as Aberdeen believes that ESG factors are financially material and affect corporate performance. Aberdeen Asian Income Fund has higher MSCI ratings in all 3 areas, so environmental, social, and governance, compared with the reference index.
Okay, so once they take companies through this sort of 3-stage process of quality business, growth areas, and generating reliable dividends and earnings and cash flow, what is the resulting portfolio structure that they've emerged with?
Yes, so the Aberdeen Asian Income Fund has approximately 60 names, with the top 10 holdings making up around 40% of the portfolio, with around 20% invested in companies with smaller market caps, so up to £2 billion. The portfolio holds some of the most successful Asian companies, as well as younger firms with promising futures. In terms of geographic weightings, the largest exposures are to Taiwan, Singapore, and Australia, which are the 3 highest yielding markets in the Asia-Pacific region. Notable variances versus the reference index are an underweighting to China and an overweight exposure to Singapore. Looking at sectors, the fund's largest allocations are to technology stocks, which is an above index weighting, and financials, where the exposure is more in line with the reference index.
So once they're looking at growth themes, perhaps you could sort of explore some of those growth streams that are represented in the portfolio.
Yes, with pleasure. There are a series of growth themes in the funds, including aspiration, where increasing middle-class wealth is driving higher demand for premium products and services, with portfolio examples including AIA and Tisco Financial Group. Then building Asia, for instance, the portfolio company Power Grid Corporation of India has regulated cash flow supporting its dividends. Plus, the company is a beneficiary of the goal of providing electricity across the whole of India by the end of the decade. And finally, technology enablers include well-known names such as Samsung Electronics and TSMC, which are both industry leaders and are Aberdeen Asian Income Fund's largest holdings.
Okay, so now we have a reasonably good feel for the fund. Maybe you could just give us some examples of more recent sort of portfolio activity.
Sure. Maybe let me start by saying that portfolio turnover is, generally relatively low at around 20% per year, although activity has picked up in recent quarters to take advantage of market volatility. So over the last 12 months or so, new holdings include Tencent, a major Chinese internet platform which now pays a dividend, SITC International Holdings, so a Hong Kong-listed shipping company, and the Bank Mandiri, one of the largest Indonesian banks. On the other side of the ledger, complete disposals include Astra International, sold following receipts of a special dividend, China Vanke and China Merchants Bank. The sales were as a result of a deteriorating Chinese macroeconomic backdrop, and a few lower conviction holdings where the proceeds were used to fund positions in companies with more attractive dividend growth and yields.
Okay. So if, as a potential investor, if I was to pick up the fund's latest annual results, what are the key highlights that you would draw me to?
Mm-hmm. So Aberdeen Asian Income Fund posted an upbeat set of results. In FY23, the company outperformed its reference index in both NAV and share price terms. The board negotiated a more competitive fee structure, and there was a significant increase in the dividend. The board announced a reduced fee structure, which is based on the lower of market cap or net assets. This is around 23% decrease versus the previous fee and is equivalent to an estimated £664,000 saving based on the company's year-end assets. I believe that the shift to a market cap-based fee aligns the fund more closely with its shareholders, given the company's share trading at a discount to NAV. Aberdeen will also invest 6 months of the fund's management fees in the company's shares. Aberdeen Asian Income Fund's FY23 total distribution of 11.75 pence per share, which was fully covered, was 17.5% higher year on year. This marks the 15th consecutive year of higher annual dividends, meaning the company is an AAC Next Generation hero and well on its way towards a 20-year record required to be classed as an AAC dividend hero. Over the last 5 years, Aberdeen Asian Income Fund's dividend has compounded at an annual rate of more than 5%, and the fund currently offers around a 5.5% dividend yield.
Wow, that's a really attractive track record on the dividends. Do you feel that investors fully appreciate the income prospects in the Asia Pacific region?
That is probably a fair question. I think that some investors consider Asia in terms of capital growth potential rather than income. However, in aggregate, dividends now make up more than 50% of Asian equity total returns. Also, Asian corporate balance sheets tend to be stronger than those in developed markets, which bodes well for continued positive income from Asian equities.
So let's sum it up. I mean, why should an investor consider investing in Aberdeen Asian Income Fund?
The fund offers the prospects of both capital and income growth and could be considered as a core offering for investors seeking diversification through Asian equity exposure. Aberdeen Asian Income Fund's managers follow Aberdeen's long-standing quality and value approach. Its Singapore-based location provides an advantage in terms of communication and developing strong corporate and organizational relationships, along with seeking out opportunities that may be overlooked by other Asian equity investors. Aberdeen Asian Income Fund's wider than average discount versus its 4 peers in the AAC Asia Pacific equity income sector seems somewhat anomalous given its record of outperformance versus its reference index and its attractive dividend yield.
Milosz, thank you very much. That was a interesting run through on this high quality Asian income fund. You have been listening to Uncovering Trust, a podcast by the Edison Group. If you want to find out more about Aberdeen Asian Income Fund and other investment companies we cover, please visit www.edisongroup.com, and all that content is available free to view. Thank you.